We're going to do a brief video on NKE Stock Analysis, Nike stocks, and we've got a daily chart for you here with a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average of Nike here. We're looking at a bear market that started back in January of 2022 with a clear violation of the 200-day moving average. Moving average was still moving up at the time. You can see it rolled. It is now in a deep bear market. This stock is definitely a bear market stock. We had some respect for the 20-day moving average, but not a whole lot. As you can see, we've pretty much developed a pattern where it'll go down, make its deep lows, rally back up towards the 200, go sideways for a while, do it again, rally down, sideways a little bit, rally down, and it's just continuing to do that. Now, you'll notice here down at this most recent low of July 1st, 2022, it was about $99. You'll see that we kind of stopped that a little bit. We were making very sharp rallies, some sideways, and then sell-offs to new lows. This did not make a sharp rally here. We made a gradual, what you would look like, what I would define as an accumulation, people buying seriously to hold as opposed to short covering rallies, and it looks like that's what was going on here. So from about July all the way to August 16th, it looks like we had a lot of people accumulating this stock. I don't necessarily know that that's over, but it clearly got too expensive for people because they stopped buying it. You'll notice the price right now is below the 200-day, below the 20-day, below the 5-day moving average. Nike today is down over 4%, it's down over $4. Currently about $102.54 on volume of about the average daily volume, about 6 million, which is par for the course for Nike. So what do I think about this stock in the near term? Let's take a look here. This low is $99.53. The low today is $101.71. So we're definitely testing those lows right now today and see what happens. I think you could easily get a bounce off these lows, and I'll tell you why. We're beginning to get some significant difference between the 200-day and the price. Whenever we get too much difference, you'll notice we get a little rally. We get a rally here, we got a rally here, and so when you get a significant difference between the two, you're usually looking at a rally. That wouldn't normally, at this stage of the game, I wouldn't normally say that with this amount of decline, because it's not a huge amount of decline, not a huge amount of distance relative to what's happened in the past. But this stock's been going sideways, and it's been going sideways since July 1st. So we're in a trader's market on this. We're no longer in a deep bear market. I think we've, at least for the last couple months, we were in a bear market, but we were definitely not in an aggressive bear market of selling. As I said earlier, this stock's been accumulating for 45 days from the beginning of July to the middle of August. So it wouldn't surprise me if people try to pick a bottom here and trade against the 99.53 level and push the stock back up to about the $114 level by the end of the month, maybe the first week of October. I don't see this stock right this second going and testing the 200-day moving average. I think it's got to put in some rallies and then some backing and filling and some more rallies, and probably maybe attack the 200-day moving average towards the end of October-ish, maybe the third week in October. That's the most likely scenario I see for the stock right now. Keep in mind, let's take a look at it from a negative perspective. This stock's in a bear market. So if they report something that's fundamental, that's not great, the stock could easily sell down, because here's your first level of real support, $60. Now I know that sounds insane, but that's its real level of support put in on March 18th, 2020, $60. So you have a lot of risk in this stock if it does not hold this bear market low of $100. You, in my opinion, have that $40 target down here. I don't see what else is going to support it. So at the end of the day, you have to be really careful. This knife is not falling yet, but it could easily fall. And as you can see, once it goes very quickly. We went from about $145 to $117 there in, what is that? It looks like 15 in a month. So you can get a serious sell-off in this if you don't get support at the lows we discussed earlier here, this $99 low. It's in there somewhere, right here. You've got to get some support at this level here, this 99.53 level, because if you don't, I don't see any support left. Very, very tricky situation in Nike if it gets away from here. So those are the two scenarios. We're in a bear market on this stock. We have the downside risk, but it has been trading in a more sideways fashion than it has at any other time in this bear market. And so I would say that there's a 60% chance we'll get the rally I mentioned earlier to the 115 level maybe, but there's still a 40% chance we could sell off deep on this stock if something fundamentally comes up. And that's my best guess on it right now. I don't see tremendous volume on this decline today, down 4.5% on roughly 6 million shares. So I don't see anything hugely negative, but you never can tell. Keep in mind, everything's my opinion, all for entertainment purposes only. You trade at your own risk, but you definitely could see a very serious rout in Nike if it gets away from its last remaining supports. That's my best guess for right now. I checked earlier, we don't follow Nike. I'm not sure why, but we do carry 190 stocks and generate algorithmic prices for them every morning before 7 a.m. Monday through Friday. These are out for the 20th. Zeros means there's no reasonable place to enter according to these algorithms on the day they come out, so they put the zeros there. See, we do have some entry prices here, but this is in general a reflection of the fact that the market's been selling off and rallying, putting in rallies in a bear market, which is not necessarily conducive to giving you good buy points the next day. So that's what's going on here. We have 1, 5, and 20-day holding periods. These are trading day holding periods. So basically, if you bought this column, assuming your own analysis says it was a good idea, you'd buy today and close out at the end of trading the next day, or take your profits as soon as you get them. And that's the way you would do with the 5 and the 20-day holding periods as well. Buying the column price, assuming at the column price, assuming your own analysis says it's a good idea, take your profit as soon as you get it, or close it out at the end of the 1, 5, or 20-day holding periods just before the trading session ended. And again, these are trading days, 1, 5, and 20 trading days. You can get all these stocks, 190 stocks, at rbamresearch.com. In addition, you can get the major forex pairs, BTC crypto, and the most liquid futures contracts. Everything is longs or shorts except for the stocks, which are currently longs only. There's a link in the description below to rbamresearch.com. You just follow it, no credit card required, absolutely no cost. Just go there, sign up, and get them for you. Get them for yourself. If you like this video, please click the like button. If you want to subscribe, please do that. We're putting out quite a few videos. And if you have any comments on the moving averages, for or against moving averages, please leave them in the comment section below. We'd love to hear from you. Keep in mind, everything you've seen or heard on here, including my commentary and the entry prices, are for entertainment purposes only. You can't use them for anything other than entertainment. You should do your own analysis, and you definitely trade at your own risk.